Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the 22nd of January 2019, 2:45 p.m. Central Standard Time. Okay, an up day in the gold. Gold got down to its Bollinger Band, missed it I think by 30 cents, and then turned itself right around from these lows, looking pretty good. Silver slipped through the lower Bollinger Band by about a penny and a half, came roaring back 13 cents over that. The stock market's been down hard today as we're hearing now the bad side of U.S. trade with China. Remember, last week it was all good. Boy, the deal's made. China's offered to get rid of the trade deficit in 5 to 6 years, but there was no mention of intellectual property. I kept saying that in my written reports, and I said that is the fly in the ointment. They have to do something. They haven't. So what happened today is the U.S., called off a lower level trade delegation meeting that was supposed to happen this week. The big meeting is still on with the big boys next week at this point. We'll see. Remember, the Huawei technology, their leader, their CFO, I guess it is, she is still in Canada under arrest. Our Department of Justice is absolutely going after her. They say they'll have all the paperwork and everything needed to extradite her by the end of this month. China is demanding she be released. Do I hear negotiation that's possible? You know how that works. Energy markets down when we saw the Chinese growth slow to the worst levels since 1990. Stocks dropped on that. You dropped a little bit in currencies. The pound up. The pound's in its own life. If you think Brexit's going to affect the U.S., you're wrong. It really doesn't. It'll affect Europe a bit, but it's really a UK issue. As I come to the gold market, the most recent break low was 1234. You got to 1289.50 and you're sort of stalling. But how could you call this anything other than still bullish? That's how I view it. The bias is up as you're over the 18-week moving average of closes. Now the negative is right here. As you know, I drew this for you last week. And I said I had thought the market really stood a better chance of breaking out to the upside than downside. You can see that right there. And then it let loose on Friday, further today. Okay, so the market broke out to the downside. This formation has completed itself. I'll be able to get rid of it. Now what we have is a market that's got lower highs, lower lows. Definition of a downtrend. The market is under the 18-day moving average of closes in red. Bias down. So I have the trend down, the bias down. Under the current chart pattern, you'd have to take out 1295.40 in order to break that downtrend, but that would not turn an uptrend into place. You wouldn't be able to get a higher low, higher high scenario. Where did the market run to? Well, if you take a look, 1275.90 is the lower Bollinger Band. Today's low was 1276. I'm going to say for all purposes it hit it. And when it hit it, it just turned away and didn't look back. When I look at momentum, it is still pointing down. So we're in a downtrend as defined by the swing line. The bias is down. The momentum's down. You have hit your downside target. Doesn't mean you can't go lower, but you have hit it. And resistance is back up at the 1288 level, the 18-day average of closes. When I come to the ETF, you have no trend. You have a higher high and a lower low. Now, if we come back to last week, you were acting good until Friday, at which point things started breaking down. You followed through a little bit, but you couldn't even keep the momentum and get to the lower Bollinger Band. This market is not trending. It is correcting. It is out of being overbought. When you embed and first lose it, you get to that overbought condition. You also did something else. If you look at the sideways action, you lost the embedded reading, you hit your downside target of the 18-day average all in one day. I think that's when the market ran out of momentum. In GDX, the trend has been lower highs, lower lows. You still are oversold. It was interesting because I was reading today Jeff Gundlach, and over the weekend he was talking how much he likes gold, and he was talking this particular fund, how he liked it, but it is the weakest part, not the strongest, at least right now, of how the market is looking in terms of gold. When you look at the gold-silver ratio, you are still in the correction zone where you came from nearly 86 down to about 81.5. Now you're back to around 83.7. That's how many ounces of gold, silver you need to get an ounce of gold. The fact that it's staying over the 18-day moving average of closes keeps the bias in favor of gold, which means gold is stronger. Now, if you take a look at what silver did, silver had been in a downtrend, lower highs, lower lows. This is Friday. If it continues down, the market might be targeting the lower Bollinger Band, which is going to move, obviously, as the markets reopen. And that's exactly what happened. That number that it hit was 1950, 1521 was the lower Bollinger Band, and last trade's 1533. So you've hit your downside objective. Oversold. I think the pros stepped out of shorts today. I can't prove it, but that's what I'd expect. In the copper market, I'm looking for support against the 18-day average of closes. I'm neither bullish nor bearish. I see a lower low and a higher high. You know that if there's a Chinese trade deal mentioned, one of the markets that'll tell you it's happened is copper. It is not saying it's happened, obviously. It's not trending either. Sort of just bouncing back and forth towards, from the lower Bollinger Band to the upper, not really going anywhere. In the platinum market, still in a downtrend. Lower highs, lower lows, but oversold. You may have gotten close enough to call it a game today. You don't have to hit lower Bollinger Bands. You get within them, you got to look and see what your momentum's doing. A market where I think the bullish momentum came out of the marketplace is palladium. I think the pros are tonight being short this market, looking for price in the 18-day average to come together. Pretty bold statement, a heck of a lot of risk back up over the all-time high of 1380.120, and the fundamentals haven't changed. That's 90 points away almost, but I still think momentum has gripped this loss of it, and I'm looking for price in the 18-day average to come together. In the dollar index, this is what you call stalling out. Momentum is still up, trend is up in the market. Bias is up, support's back here, but you seem to be running out of steam to the upside. You know, I don't know about you and how you go about what you do, but let me tell you what I do. Each night, I'm on all the wire services. I get letters from private other writers in the industry. I'm looking to see what people's thoughts are. And then I start presenting that to my subscribers. Not every thought I have is original. A lot of them come from other people. How many times have you wanted to make a trade and you wish there was somebody or something you saw that pushed you over that edge or kept you away if you should have been kept away maybe? Well, that's what I try to do. Each day I review 40 charts at 8:30 in the morning. And what your goal is to take a look. They come out in a certain sequence. In that sequence, and this is how my charts will look, I'm going to first do the stock indices, the currencies, the interest rate futures, meats, grains, softs, and energies. Let's assume you wanted to just go to the grains. Just take your bottom cursor, draw it. You'll see where it's at. I do everything the same way every day. It makes it easy for you to see. Now, if you have our handheld device, you can watch it in there. If not, you can see this right off our website. You do need a user ID and a password in order to do it. But that's what the morning video is all about, giving ideas. And with those ideas, what I'm trying to be is, and I realize I'm not your individual broker, but I'm trying to be as close as I can to it for those that subscribe. You think this is expensive. If you think $7.95 for the first 30 days is expensive, don't subscribe. You're uninvited. It's not expensive. I think if you met with me one-on-one, what do you think I charge you in hourly fee for me to give you a consultation? I promise you it's going to have 3 numbers, minimum, could be 4 digits in there. So that's what you're getting. You're getting the benefit of this, and you're getting to see what I'm thinking on day trades, position trades, and the like. And yeah, I admit I'm pushing this right now because I think that with that, you're going to want to do your brokerage with us. You're going to want more of what we do, and away you go. $7.95 for the first 30 days, afterwards $15. Come on. and I might lower that 15. I'm really thinking about it. We're getting a lot of subscribers. Give us a call at this number. You can go to our website also, and under the word education or research, you'll see both there. Go to my morning subscriber. It'll ask you to sign up right there. Do it, and you'll be online for tomorrow morning. I'm Ira Epstein. Have a great day, and I'll see you tomorrow.